Hey guys, good afternoon. This is Eric with Inspired Trading. Hope you guys are having a wonderful day. I'm just coming to you today to go over the Elimination Bar Strategy. And I also want to talk about how I lost $300 this morning because I did not properly use my trading plan. And instead, I went off of so-called gut feelings and anticipation, which is really something that you should not use in your trading. All right, follow your plan. Make sure you stay the course. All right. Remember, it's better to lose based on your plan and not to lose based on you breaking a rule. All right. So that is a big, huge difference. Also, a disclaimer, this is not investment advice. These are just my opinions. All right. So we're on a Canadian dollar, Japanese yen. I was looking to take this trade earlier today. Um, we had a nice little bullish candle that formed, and then we hit some resistance. Remember, resistance is when price turns around. At the top, that's resistance. When price turns around, the bottom, that's support. All right. Also remember the rules. When resistance is broken, it becomes a new support. When support is broken, it becomes a new resistance. All right. So let's get to it. On this particular trade, I anticipated, which was the wrong thing, that this was going to turn around and go short. All right. I initially was correct. It did go short. However, if I'm using the elimination bar strategy, what I was supposed to do is I was supposed to enter short once a red bar eliminates the previous green bar. All right. That did not happen. So what I did was I entered in this, I was up, and then all of a sudden it turned on me. Me saying, well, I anticipate that this is going to be, this is going to go short. I'm just going to move my stop loss, which I had a stop loss in place. My stop loss was right here. All right. But I saw price coming back and I was like, look like it's going to get hit. So what did I do? I moved my stop loss up into this area. What did price do? Came up in it and knocked me out. I lost $300. I broke all the rules. All right. For one, I should have kept the stop loss there. But for two, I should have never even entered the trade because it wasn't based on my rules. This red bar did not eliminate this green bar. All right. Now let me show you how the trade was supposed to go. If this bar would have eliminated this green bar, I would have entered short right here. Where my stop loss go? Still above here. Where do your stop loss go according to this rule? Remember the rule. Your stop loss goes either above or below the candle that was eliminated. If this candle eliminated this candle, I put it above. All right. I put my stop loss above. So basically, if a bearish candle eliminates a green candle, you put your stop loss above the green candle that was eliminated. If a green candle eliminates a red candle, you put your stop loss below the red candle that was eliminated. So I'm going to show you where that actually happened. All right. And it doesn't have to be immediately after. All right. I'm going to show you here where a green candle eliminated a red, but it really wasn't that afterwards. All right. It was maybe a couple candles later. But actually, you probably will see. Yeah, we can, because this is what I'm going off of this right here. So you got an indecisive candle right here. All right. So we're going to treat it as a bearish type candle. All right. Then you had what? You had this green candle to um to eliminate this red candle. But I'm really looking at this red candle because it was stronger, it's solid, it's good. So if I was trading this, I would probably look back to this candle. All right. Yes, you can use this candle too, but I got my eye on this one. I need a bullish candle to eliminate this, and we did. We get it right here. So then that would have been our entry point. All right. We would have entered in long. Trading stocks, of course, whatever you entered a buy position on a particular stock. All right. It broke. We entered. Where our stop loss go? It goes below the candle that was eliminated. So you got two choices. If you want to go with this candle, you just put your stop loss. Well, yeah, just put your stop loss right here. You can label it if you want. No, we're not even gonna do that. We're gonna just do this. Let's drag this over here. Stop loss right there. If it's stocks, just do a few cents below that candle. You can do like 5, 10 cents, whatever. Doing Forex, do like maybe 3 or 4 pips below to give you some cushion. All right. So this trade goes through. How many pips this would have been? Up to the next area of resistance, which just this line was a resistance. If we go back and we look left, there's probably a key area that you probably did not see because it's so far back. That's why the line, and it's taking forever to get there. We'll get there. Let's see. Oh Lord, here we go. See, this is once an area of resistance. Sorry it took forever to get over there, but that's why that line was there. And so we're gonna remember, you always look left when you're trading so you can help get your targets. All right, that was a target zone, and you see it hit. So that was 45 pips. Normally I play around with standard lot sizes. That would have been a $450 day. All right. If y'all hear other people outside talking, I'm outside in my backyard. I got a trail in the back. A lot of people walk. If you hear people talking. All right. So, yeah. So you clearly see using this strategy. And guys, you can keep this simple. Like, it's plenty of strategies out there. A lot of people jump from strategy to strategies because they go on a losing streak and they want to find the so-called holy grail. Oh, I know this is gonna work. I'm gonna make money. Make money. Look, every strategy lose money. Like, that's not how the market's designed, for you to make money every time. All right, stick with your plan. Still trade your plan. It's the way we either over leverage, we're too heavy, and it goes against us. I lost 300 today. I wasn't supposed to, and I did it on a smaller account. It was only $1,200 in there, and I risked over 300. That's almost 30-something%. Like, that's too much. So no. So that was bad on my part because of anticipation and emotions and what I think. No, don't do what you think. You trade what you see. Okay. So I needed to see a green candle eliminate this red, or this red candle eliminate this green. Other than that, I shouldn't have been in a trade. All right. At least to the downside, I shouldn't have been in. Okay, let's go back and let's look at other scenarios. We got an indecisive candle right here again, and we're going to go ahead and label that as a bearish candle. Okay. Just because it's red, we're just going to, that's what we're going to label it as. Just remember, it's like the green candles eliminate the red candles eliminate the green. That's all we worried about. What happened? This green candle eliminated the red. You go what? Long, right? Where your stop loss go? Right below the candle that was eliminated. What did we get? We got this huge movement. Look at all this money left on the table. Look at all this. Look at this upside. $1,300. Realistically, would I held that long? No. I probably would have took profit right here. I think I missed. Hold on. Sorry, guys. That was wrong. Let me see. So, yeah, right. So 105 right there. I would have took profit right here. So instead coming out about $1,050. All right. So I'm showing you guys how this works. Remember, it's the elimination bar strategy. You got a red bar, then you have a green bar. The green bar did what? It surpassed right here. It surpassed the red. You go long. Then you had a little consolidation, but it don't matter. Why? Because your stop loss is what? Below the bar that got eliminated. Since this was eliminated, you can go ahead and go long. But yeah, right here. This is where your stop loss is. Did your stop loss get hit? No, you're it, you're still in the trade. You can get out right now if you want. But look what happened. You in it right here for that at that level. If you get out now, that's 167 pips. Don't make it difficult. There are going to be times when it doesn't follow that. It's going to break below. All right, it's not eliminated. And maybe I can find one on the chart to see. Yeah, right here is a perfect one. All right. What did it do? It eliminated the red bar. All right. And then your stop loss would have been right here. Stop loss right there. And what happened? It went up and then it came back down and it hit your stop loss. So you would have lost right here. You're lost. How many pips to say you're taking a standard? Here's the good thing: you was up in profit, so you was up by $110. All right, you see it coming back down. You can do what? Move your stop loss into profit. So even though your stop loss got hit, you can break even, or you just get a minimal loss. Or if you don't want to do that, you just leave it in. All right, you was up 110, and then all of a sudden it comes back down. It hit your stop loss in this area. All right, you walk away with losing $110. But you just made 1,600, 1,700. Over here, I showed you 400. All right, you just had one in this little section of this whole entire screen from here all the way up into here. You, from this point on, you had one loss. You had one, two. You had like 4 winners over here. So you would have won 4 times if you continuously was trading. 4 times, and you would have lost 1. That's good. And then you lost 110. It ain't like you lost 1,000. You see what I'm saying? See, that's the problem. If you would have lost $1,000-something, you done. You probably done for the day, week, or a month. You probably decimated your account. And like I said, I was trading on one of my smaller accounts, so that $1,200, that was terrible trading. I gave up $300 on that. That wasn't supposed to happen. My stop loss should have been anywhere between maybe $40 to $50, maybe. That's it. Okay. So that was my bad. I'll make it back. I'm not worried about it, but I need to stick to the rules. Eric, stick to the rules. You watching this video, stick to your rules. All right. So this is just simple strategy. Let's go look at Facebook. Okay. We're on an hourly. What do we have? Red bar. What's the rule? A green bar eliminates it. Take it long. All right. Where your stop loss go? Right here below the bar that was eliminated. If a red bar was eliminated, you put the stop loss below the red bar. You do it a few cents. Okay. This is around $12.75. Maybe you want to do it in $12 and maybe 52 cents. All right. Where's the stock at now? It's up here at $219.50. I don't know if I said $12. I meant to say $212.75 and $212.52 is the area where you may want to set your stop loss. And right now, you're up. You're up in profit. Okay. If you're taking an options contract out, you're doing pretty well right now. But you did it based on what? This bar being eliminated. That's it, guys. Look here. You got another one right here. You got a what? A red bar. And then what do? You take the trade long to eliminate the red bar. You put your stop loss where? Below the red. What do we have right here? We have a green bar, but then what eliminates it? A red bar. Where you put your stop loss? Above the green bar, because that's the bar that got eliminated. Stop loss is right here. Okay? You took it short. You either shorten or you put puts on option contracts, and now you're making money on this going down. Where you want to trade it to? You trade it to an area. Let's go make this long, bigger. Should have did it bigger the first time. But anyway, you take this trade based on area of what? if it's going short, you look for area of recent support. Look what happened. See this? This is support. So let's go ahead. We're going to put a line right here. Boom. That's one area right here. And you got this area right here. So it's two zones. One is your first target zone, and the other is your second target zone. All right. And then you would draw a box in this area. And if price comes in this area, you take profit. All right. Remember, you did what? When this green bar, the green bar right here was eliminated. This what? Green bar got eliminated by this red bar. As soon as you went short, where's your first target? Just green box. Price eventually came back down into the green box and you took profit. Okay. So you clearly see that how this can work. I've already shown you a time that you would have got a stop loss hit because this is not perfect. Nothing is perfect. But look at this. Somebody right here is buying. There's no reason to buy right here. You got a lot of things that's going against it. First of all, the moving average is too far away. Remember, when we're in a state of expansion, you don't buy in a state of expansion. You sell in a state of expansion. You don't buy. What is this? This is a expansion. Why? Look at the distance between the moving averages and price. If you're gonna buy based on a moving average, you need to buy in a narrow state, or at least buy in a state of where something is being eliminated, which we talked about the bars. Look, you see right here. Look at this red bar. What eliminated? This green bar. This green bar eliminates this red, and then we went on a nice little rally up. Guys, I'm showing you right now. You see before your eyes opportunities throughout the chart that you can buy throughout the day. This is if you're day trading. Okay. Let's look at what's another stop. I'm gonna do Apple. Red bar, elimination. And then this is like a little flag, a bullish flag, look like it's about to form. But right now, if you just got on in this, are you trading it? No, because why? This green candle has not eliminated this red. So no, you're not doing anything until it does that. What do we have right here? A red candle. What eliminated? A green. You're in the money. Boom. Red candle. They got eliminated right here. Start eliminate. Boom. And we got another red candle. Then we got to start to eliminate. I think this would be a perfect one right here to say that you potentially would have got your stop loss hit. And it's this one right here. You had a red candle. All right. And then this was a red candle. It eliminated this one, but then turned into like a indecisive candle. So then we got a pullback. Okay. If your stop loss is right here, it would have got hit. Because if you follow the rules, you're like, hey, this candle like it's about to form and surpass this green one. I'm sorry, this red one. This green candle is about to surpass this red one. I'm going short. It never made it, and it went up. So your stop loss would have got hit, which is fine. Okay, you would have entered in at 313. Your stop loss would have been at 316. 22 or somewhere in there, it got hit. Okay, or you would have been up a little bit, and you may have said to yourself, "Hey, let me move my stop loss deep into profit." No, it's not deep, but maybe it break even or so. It might have been a minimal loss. Then you got some people who would have hedged this. All right, one of the stop losses got hit. You also would have maybe been in the money. Would have had a put in, and maybe on the call side, you got one that goes into the money. You either break even or you come out on top on the call, which would have happened right here. So that's more a little complex trading or whatever. But you clearly see, look, don't be afraid to take the losses. You're going to take the losses. Just don't be like me today and just take a catastrophic loss. And then I tried to revenge trade, which is a no-no too. I was like, I'm going to make it back, and then I wind up losing more. So, no. So you see it on this chart. We got multiple opportunities to trade. You had a red candle. Then you had a gap up. And this gap up could have happened pre-market or whatnot. If you don't want to trade the gap up, just wait. You got this nice little consolidation area, and then finally you had another gap up. But as soon as the price gaps up, you take the trade and go north, and you see what happens. Okay, I tell people sometimes it's a great idea if you're trading stocks to don't look for doing options such as like puts and shorting, because it may be a little bit too complex for you. But what you can do is you can always go to the chart and look for one directional trades, meaning that you're only going bullish. So you're not caring about what the bearish candles are doing. You're just looking for green candles to surpass red candles, and that is it. And that's good. You can do that. And you can do that in Forex too. You can say, hey, let's say you trade the US dollar, Canadian dollar, and you say to yourself, hey, for this month, I'm only going to trade the US dollar long on compared to the Canadian dollar. Meaning that if the CAD is strong is going down, I'm not looking to sell it. Because you may say, I'm just a one-directional trader, meaning that I only go long on this pair. When I first started out, I tried that for like a month. It was successful. What it did was it trained my eyes to look for buying opportunities and not selling opportunities. So you just get good at looking at one thing. Like, hey, I'm like right now, if I'm looking at this chart, if I'm only looking for buying opportunities, right, I don't care about all this. Like right now, I'm focused on this. I'm like, this is a key area. If we break this, I may look to go. However, you got to slow down too. You got to look left because there may be a lot of traffic. Look, we're at this critical level. So technically, I wouldn't take this trade now, because why? We're at critical level. Critical level what? Resistance. There's not too much upside. If this comes up here and it tests it and it gets rejected, then we may fall down. So I probably would leave this trade alone. Like, hey, it's not. But if we're down here, what can I do? I look left and I say, man, we got a lot of upside potential. If I'm down here, trading this, I'm like, oh, okay, it's time to go long. Look at all this upside. Look at all these targets up here. And look what price did. Price hit all those target zones, all these resistance zones. All right. So you be careful. Don't just blindly jump in. Like, oh, it surpassed the red bar, and you at the tail end, and you at the end of the trading life cycle of that particular stock or pair, when it's clearly about to maybe do a trend reversal. So I hope this video helped you guys to understand you can make this very simple. Remember, your target is going to be either recent area of support or resistance. Your entry is going to be as you break the previous candle, and your stop loss is going to be below the candle that was eliminated. If a red candle was eliminated, you put it at the top. And if I think I messed that one up. I'm sorry. If a red candle is eliminated, you put it at the bottom. If a green candle is eliminated, you put it at the top. All right, so you reverse the two. So I hope that helps. It makes sense. Start practicing. You can use it on demo. So I recommend that. And if you're gonna start out trading, hey, just try to trade with $100. Try to trade with $50 or so on forex, or $100 on stocks, and just make smaller trades. Make all your mistakes and everything. So it's good to work with a demo and a live trading account in tandem, because what happens is you get the emotional aspect. With demo, you don't get the emotions, so you don't feel it. So it's real when you lose money, you feel it. Like, I don't like that feeling, so it makes you a little bit sharper as a trader. Too many people ball out on a demo. They take unrealistic lot size, unrealistic option contracts. They brag, "Hey man, I made $13,000, da da da," but that ain't real money. And if you was playing with real money, you probably will never make that type of trade. And there's people out there who loses 13, 14, 15,000. There's people who are blowing their inheritance money, trading in the markets by going too heavy and thinking that they got the holy grail and they can't lose. It's because they got spoiled on the demo. Stick to those rules. As much as I say that, people still don't break the rules, because you see, I even broke the rules. Okay, it happens, but that's why we human, and that's why we strive to be, as good as possible, as perfect as possible. We will never be perfect, but just keep going. Y'all have a great day. Y'all enjoy yourselves. Spend time with your families. Read, study, listen to some good music, eat some good food. All right. Hope to see y'all tomorrow. All right. Have a great one.